Welcome to Home Buying 101 with Francisco Gonzalez. This week with me is Maria Hernandez with WHAM. How are you doing today, Maria?
I'm wonderful, Francisco. Thank you so much for having me on today.
Oh, thank you for coming. So, Maria, can you tell us who Maria is first? What you did before lending, what got you into lending, why you like lending?
That's a very interesting question, right? And again, it's a long question, right? Because it's like we're talking about ourselves, but really, I always have to give credit where credit is due because obviously, where we are sometimes isn't really it's not a product of just our own efforts, right? But yes, who is Maria? So I'm a native to Phoenix, Arizona, first generation Mexican American. So I was the first in my family to graduate from college. So I did graduate from ASU. Shout out to all my Sun Devils. Have you ever hiked E Mountain?
Actually, I have. When I first moved out here, 4th of July, we went up there.
No way. 4th of July? Okay, that is not ideal to be hiking in the summer.
What was that night? So to see the fireworks.
There you go. Okay, that's neat. Yeah,
so pretty cool.
That's really good. I'm happy that you did. So then, yes, right? That's, I'm a product of that community. But yeah, so I originally, when I graduated from ASU, I was a teacher for a couple of years. I guess I have a heart of serving, per se, because I always wanted to give back to my community, right? Because I'm a product of all of the, the people, the mentorship, obviously the scholarships that were available, right? That led me to where I am today. So that was a really beautiful journey. You know that in 2020, you don't have children, Francisco, but when the pandemic, hit, it was very unfortunate because a lot of schools, shut down. And so that was really big for not just families, right, but for children too, because, now, right, that social emotional aspect of being a child, right, it's very important. So
of course,
that affected a lot of, children at that time. But that's when I did switch careers. I was in the insurance industry for a couple of years as well. And that was a lot of fun because that's when I really learned sales. So, and when it comes to lending, it's a little bit of both, right? Which is really neat because, I'm super grateful for the person that brought me into the business. And that was Eddie Gomez. And, he took me under his wing. And so having that history of teaching, but then also sales, I was a really great fit for the job without really even knowing. So.
Yeah, I can see that just because since you already knew how to teach, you have to kind of teach your clients about certain things. So I can see where teaching kind of comes into that too.
Yeah. So you have to come in from that, from that angle as well.
And I will tell you this, like what you were saying about COVID is I remember because I used to go to 3-4 events a week before COVID. Yeah. So COVID kind of hit me hard because I was always out socializing, meeting new people, trying to get in front of new clients and stuff. So COVID hit me a little hard too, just because instead of every day having a different event or doing something else, it just cuts off the whole socialization. And I've heard a lot of people, it impacted a lot of people because, you're so used to socializing that a lot of people fell into not a depression, but kind of just
Correct.
their dopamine. Because once you're out socializing, if you're used to it, your dopamine levels are pretty high because you're just out there just kind of socializing. And a lot of people feed off of other people's energy. So
absolutely.
If you're not out there feeding off someone's energy and just socializing, it affects you too.
That is very true because there's something to speak for that you can't really get that off of Zoom, right? Because a lot of that, everybody pretty much went virtual, right? And it wasn't the same. So here we are 3 years later, right? I think everybody, society in general, right? We've started to come out as a whole little by little. But yeah, it is really neat to get back to in-person events, right? Socializing and starting to network again.
Even sporting events, that's what I miss too.
Even sporting events. I bet.
So Maria, every week we start off the show with talking about what the market looks like. So this week we've got about 12,273 active listings. So it fell 109 from last week, which isn't too bad because last week it fell almost 500. So coming soon, we're looking at 561. Pending listings, we're looking at 10,095. Median listing price, we're at 510. Median sold price, we're at 437,000. And days on the market, we're looking at 75 days. So with the median sold price at 437, Maria, what is someone looking at right now, hypothetically, for a monthly payment?
Of course. And again, right, we're coming in with just, traditional home loan programs, right, which you're either going to be an FHA candidate or a conventional loan candidate, right? And so you guys are going to be a little surprised on this, right? But for an FHA program, for the median price of $437,000, we are looking at for a principal and interest amount of $2,460, and for a conventional loan, it's actually a little bit higher for $2,610.
Okay. And of course, these are all hypothetical numbers. So
correct.
The best way to talk to you is just reach out to you and kind of sit down and look at everyone's situation. Correct?
Of course. Mm-hmm.
So I'm happy you're on the show today, Maria. Of course, I wanted to talk to you today and bring you in to talk about just some major misconceptions that people kind of are hearing out there. And I kind of wanted you to debunk these for us today and kind of give us your opinion on some of these misconceptions that are out there right now. Just because, of course, just like the show is, I want more people to be educated and get out there and buy a home. I think
Absolutely.
home ownership is very important in today's day and age. You're paying a mortgage right
Correct.
now. You're just paying someone else's. So why not pay your own?
Absolutely.
So let's just start off with one of the major ones is, do you need 20% down to buy a home or to have a mortgage?
Correct. And then, it's that also, sometimes that spreading of misinformation that can really, it stops a lot of our renters, right? Because a lot of our renters are really the ones that are going to be, they're going to be buying their homes in these next couple of years. But yeah, it'll definitely scare them. And so this is one that we hear a lot, right? That you need 20% down payment to be able to get a mortgage. And that's, again, right? There's a lot of misinformation there. So really, coming in with the traditional government loan programs, you will only either need 3% of the purchase price or 3.5% of the purchase price, right? And so again, my job is just a little bit harder because we're like the numbers people, right? And there's a lot of whenever we're having consultations with clients, they'll be like, I don't like math, and so sometimes these numbers will scare them, but it is the minimum required investment, again, right, that the bank is asking from you to take on that loan. And so, I think it's a pretty fair deal, right? If the bank is willing to give you a $300,000 loan, they're only asking for about $10,000 for you to put as a down payment, right?
And of course, sometimes even with what we have nowadays, the down payment assistance programs, sometimes people are just not even coming in with anything, correct?
Correct.
Because there's programs out there right now, and we can talk a little more about that a little later, there's programs out there that even if you have $1,000 in the bank, you can qualify for some of these programs that can help you get into the home, correct?
Yeah, absolutely matching them. And so, our job as lenders, we're going to tailor, your needs, right? Every consultation is specific to each person. But, if there's any programs or grants that you qualify for, we're going to make sure that you know those options as well. And really from then, it's just going to be, which route you decide to take.
Of course. So then another misconception that I've heard a lot is you need a 640 to qualify for a loan.
Correct. And I'm sure with everything that's been heard of in the media right now, right? With if you have a higher credit score, you're going to be penalized. And so it is not true that you need a minimum requirement of a 640 to get a home loan. However, that is when you start receiving the best financing option. So that part is true. So it is very important, right, for anybody who's listening to still take care of your credit just because, with everything that's being put out in the media right now, if you have lower credit scores, that doesn't necessarily mean that you're going to be getting the best deal on your monthly payment, because really that's what we're speaking to, getting a lower monthly payment.
So of course, even if you qualify with under a 640, sometimes I'm guessing you'd advise a client, hey, it looks like you're at, what's the lowest you can qualify right now with?
I want to say the lowest really you can qualify with is like a 580, 590. You will have to have reserves or money in the bank though. So
let's say, for example, someone's at a 580. Is there situations where you'll recommend, hey, let's work on your credit for 3 to 6 months before we actually do your loan?
Correct. And so that'll just be depending on whether, if you have cash reserves, right? If you have like retirement funds that not necessarily you're going to be using towards the purchase of a home, but it's like a backup, right? It's showing the bank like, hey, even though my credit is a little low, I do have $10,000, $15,000 in a retirement account that can compensate if I'm not able to make my monthly payment. Okay.
And of course, you guys, WAM, also help with credit services. So if someone's not ready to purchase, you guys can coach them to let them know, hey, if we do these couple things, we'll be ready to buy in a couple months.
Absolutely. Yeah. We do have credit simulation programs that will, we will find creative ways to get your credit where it needs to be. And again, everything is a matter of a timeline. So it's not necessarily, if you're going to qualify, it's going to be when, right? How long is it going to take us to get you there?
Of course. This is another misconception I haven't heard too much, but you brought it up with me earlier before we started the show. You can save money by not using a real estate agent.
Yeah, that's a really big lie that I think has kind of been put out there, right? And just, us as buyers, we always want to make sure that we're getting the best deal, right? We're getting the biggest bang for our buck. And so sometimes people may think like, oh, if I don't use a real estate agent, right, then I'm going to be saving money on the purchase as well. And so again, that is a lie, right? Remember, you are working with professionals. You're talking about, a purchase of thousands of dollars, right? And so you want to make sure that you're having a professional represent you so that when you're entering into that contract to purchase that home, that it's going to be you're getting the best home out of it, right? Because, I'm sure as an insurance professional, all of the things that can go wrong with the purchase of a home, especially with all of the things that, that you guys see, that sometimes, we don't know what's beyond, a wall. We don't know what's beyond a foundation. We don't know what's under the ground, right? Like in regards to sewer and things like that. So you want to make sure that a professional is going to be there for you to represent you.
Of course, to guide you and tell you, hey, we need to do this. We need to do it based on the age of the home. We should do a sewer scope, or based on the home, we have to do these additional things in inspection. So like you said, it is good to have someone that's been through the process to guide you through that process.
Correct.
So, of course, the next one is, and this is a big one that we've talked to people about over the last couple episodes, is it's a lot of people say it's cheaper to rent than to buy.
I think that's going to be the slogan that you're going to be hearing forever, right? When it does come to it's cheaper to rent than it is to buy. But yeah, we are seeing that rent prices, they're starting to settle in just a little bit, right? We do know that, in these last couple of months, renting a 3-bedroom, 2-bathroom apartment was really similar to paying a mortgage. And so that's where sometimes, those misconceptions can really also come across. And so again, every family is going to be a case-by-case scenario. We're going to make sure that we give you that, that full in-depth evaluation so we can see if it's a good fit for you.
Of course. My favorite saying still to this day is, if you're renting, you're paying 100% interest.
Yeah, that is true.
Let me ask you right now, when you give us the payments, how much was FHA at for a monthly payment?
Correct. So FHA for that $437,000 median price was $2,460.
$2,400. So I had Ivan up here maybe about 2 weeks ago, and the rent was about that. I mean, rent was, depending on the area we were talking about, you were anywhere between $2,000 and $2,400. So like you said, even if you put in a couple $100 extra, you could be owning instead of renting.
Absolutely. And then, you have that liberty to really make that house your home, right? Painting it, changing the tile, right? Adding an extra bedroom if there's no, if there's no homeowners associations, with that. And so you can really make that home, yours.
Of course. And that's another thing we talked about is, like, when you're renting, you sometimes don't have the choice to make the home yours. Like, you kind of have to stick to the bare white walls the person's renting the house out to you.
Yeah, and I've actually been seeing like a lot of, trending TikToks and even on Instagram where it's like renting hacks, right? Of what you can do to make your apartment or the home that you're renting just, a little bit
more homey,
customized.
Okay. So we kind of already talked about this, but a lot of people are thinking they don't need a home inspection on a newer home.
Yeah, and with new builds, that's something that's come out again, right? You would think, because the home is being built, from the ground up and it's new, you do want to make sure that you're getting a professional in there to, again, ensure that everything's, that your home is going to be fit for you to buy it, right?
Well,
it's one of your greatest investments.
Of course. And also, you never know, like we talked about this with also the inspectors we had on here a couple weeks ago, is before the house was there, it was just an empty plot of land.
Correct.
It was just dirt. So they found different stuff. Like, they told us one of the new builds that they went and did a year after inspection, they had no insulation in the roof.
My goodness.
There was also another case where they had some of the piping, there was a soda can or a beer can stuck in the piping.
Oh no.
So it's you think, oh, this is all new material, but you have to do an inspection because you don't know what was there before, or
Correct.
in the process what, not mistakes or accidents happened, but what was left behind.
Yeah.
So you have to make sure, of course, on anything, make an inspection. And that happened a lot during 2020, 2021, where everyone was just like, oh, I don't even care. Like, I just want the home. Let's waive inspection. And a lot of people are going to end up paying for that because you don't know, like you said, what's in the walls, what's in the roof, what's in the plumbing. So you don't know what's going to happen. So.
Yeah, no, that's something super important to speak to. And again, for our listeners that are listening today, making sure, again, that you go in with a professional, especially when you're going to be looking at new built homes, because sometimes, they're going to want to negotiate, to also, if they don't have to go in and pay that, just because it's already built into the, the listing price of compensation. Again, making sure that you're walking in with a professional.
Of course. So let me ask you this. When it comes to getting your credit pulled, because I know, and this might even be a misconception itself, but I know when you're car shopping, they say, hey, when you go car shopping, try to do it in 30 days, because once they pull your credit, once for car shopping, it doesn't ding you if you kind of get your credit pulled a couple of times the same day or the next day. So can you talk to us about that when it comes to lending, I guess? Yeah,
it's pretty similar with lending. And so now what we're seeing, just because, again, right, we are seeing with how volatile the market is and whatnot, right? So what we are advising, especially our clients, to do is we recommend to always get a soft pull, right? Just depending on what their timeline is, right? If they're looking to purchase within the next 3 months, 3 to 6 months, okay, we're going to be doing that hard inquiry. But if your timeline's really not there and you're just wondering where you stand, we're always going to recommend the soft pull. That way it's not hurting your credit score.
Okay. So when it comes to, let's say, for example, I qualify for $500,000. Should I go look for a house for $500,000? Just the max out my credit, pretty much?
Max out how much home you can afford. It's really going to be, again, right, looking at your finances, right? Because what we're seeing, right, so of course, right, we're going to quote you on what your monthly mortgage payment is, but that's not considering, your light bill, your water bill, and any other fees associated with just having your home, that it can really start getting expensive. And so, something that just was really popular, or actually it still is really popular, right, is, the sub-2 buying, right? It's where families, not necessarily that they couldn't afford their home, right? But it's just that they got into a home, let's say like, this past year or two where home values have, they have come down just a little bit now. But really it's just with that, because they had such a low interest rate, even if they were trying to refinance or sell, they're not going to profit anything, right? And so again, we want to make sure that it's going to be the best fit for you and that it's going to be something that you can afford.
Okay. And then can you talk to me about adjustable rate mortgages? Because I know they were a little more popular maybe about 2-3 months ago, but of course they're always around. So can you talk to me about what is an adjustable rate mortgage, and is it a good idea, bad idea?
Correct. And so again, adjustable rate mortgages, and this is something that a lot of people will ask us, right? Even when they're having a consultation, they'll be like, Maria, I want to make sure my interest rate doesn't change, that it's going to be fixed. Or do you guys provide, is it true that you guys finance homes, right, with rates that are always changing? And so again, we do have to educate our clients in that aspect, right? Because there are going to be options where, adjustable rates are a really good idea, right, for your family, to maximize your monthly mortgage payment and your savings. But there's going to be instances where, it's not recommended. So again, adjustable rates mortgages, there's going to be a period per se, right, when the interest rate can change every 5 years, every 7 years. So it's really just going to depend. And again, I see sometimes that those options are more fit for like business owners, right? For people who are going to be paying off that loan relatively quickly. But if it's something that's going to be long-term, we'll present a fixed option instead.
Okay. And then what about when people think, oh, I just need enough in my savings for a down payment?
That is something, I think in these last couple of months, just because it was a buyer's market, we did have a lot of families, San Francisco, just coming out with their down payment, which was incredible, right? But if you were, someone who purchased in the past 2 to 3 years, right? Obviously, when mortgage rates were really low, not only did you have to come out with your down payment, you had to cover closing costs, and also you had to bid above what the asking price was, right? So really, instead of coming out with your down payment of, let's say, just the 3.5%, the 3% purchase price, which is anywhere between $10,000 to $14,000, right, on a $350,000 home, then you are having to come out with closing costs, which can range another 1%, 2% of the purchase price, and then go above asking price. So what I tell my clients right now, just because, we are starting to kind of see that shift in the market where sellers are not willing to give that assistance, we just recommend you to save as much as possible. There are some down payment assistance programs that will only help you with the minimum down payment. They won't help you with closing costs. And then there's other programs that will help you with both, right? Does that mean that you may qualify for them? We don't know, right? We don't know until we actually run your entire financial profile. So again, the biggest recommendation there is just always save as much as you can.
And of course, another thing that people don't think about is, okay, you put your closing costs, you've put your down payment, you still need money to move.
Exactly.
To turn on the electricity, turn on the water. There's just so many other bills that just start coming up when you're moving.
Yeah, and so sometimes that can be just a little unexpected, right? And so again, just saving as much as you can. That doesn't mean that everything's going to be applied to the home purchase, but like you said, right? When it comes to moving, when it comes to packing, right? When it comes to, turning the lights on, those are things that we're going to want to make sure that you also have enough money to.
Of course. And I wanted to ask you being a broker, what are the benefits of working with you as a broker compared to someone that works either at a Wells Fargo, a bank mortgage company itself?
Yeah, that's a great question. And so now I see that difference now. We coming from the background that I came from, we did work for a retail bank. And so when you are only working with one bank, you only have access to one product. It's really just what that bank has to offer. And so as a mortgage broker, we do have access to several different banks around the country. And so again, it's just going to be based on your financial profile, right? Let's say if your credit is not ideally where it should be, you do have a credit score of the minimum 580, but let's say, some of these bigger banks, the the cost to really purchase with them is a little bit higher, we have several options to see which one's going to be a better fit.
Okay. And then can you talk to me about some of the down payment assistance programs you've been seeing right now? Is the one in Avondale still available right now?
For the city of Avondale, it is. And so that one, you do have to come in with the 1%, right, of the purchase price. You do have to come in with your own funds. And again, right, the WISH down payment assistance, that one is still available as well. However, you do have to apply for it. So you do have to submit an application first, to see if you qualify for it before it can be considered into your purchase.
What about some programs with Trellis that you've seen lately?
Pretty similar. So Trellis and Wish do work hand in hand. I have seen, though, and this is for like our real estate professionals that are out there, Trellis does have some homes that are for sale. And again, right, they're like new builds. So they're like actually in that range of the 430,000 price range. But, with the combination of what Trellis, with the different down payment programs and also what Trellis can offer themselves, they can actually bring the purchase price down to closer to 300,000. And so again, that's something, for our real estate professionals to also look into if that's something that your clients can qualify for.
Okay. Is there anything else you'd like to let our viewers know about when it comes to home buying or qualifying or talking to you about just a loan?
Yeah, and then going through all of these different points, right? Because again, they're going to be misconceptions. Really, I want to say like the biggest advice I can give is just taking that leap of faith, right? Make that phone call, reach out, whether it's to me or any other lender that's out there, right? Our goal is to really get our community into homes. I'm sure with the media, right, we've seen, right, that, there's going to be a lot of other, banks, they're going to be coming into the communities and start looking into, into really buying homes as their next investments, right? And so what it's going to turn into, it's going to be, Phoenix is really popular right now, just the Valley in general, right? That we will eventually turn into like the next California, right? Where it's going to be, having a home and buying a home is going to be a luxury. So that's just going to be my biggest, recommendation. If you can get, start preparing your financial profile to become a homeowner in these next 3 to 5 years, you're going to be greatly benefiting from
Of course.
that.
And of course, talking to you doesn't cost them anything. It's a free conversation, and you at least know where you stand and what you need to do to get to where you need to be or what you need to work on to become a homeowner. Because at the end of the day, like we said, when you're renting, you're paying someone else's mortgage. It's 100% interest.
Absolutely. It's 100% interest. And so, and just like Francisco mentioned, right, it doesn't cost you anything. Really, it's just, taking that leap of faith and taking that initiative, right, to find out like, hey, if I want to become a homeowner in the next 2 to 5 years, I need to start preparing and knowing what I need to do now.
Okay. So let me ask you this. If someone wants to reach out to you, where can they reach out to you, Maria?
Yeah, absolutely. So, we're on social media, so you guys can, send me a DM. Maria knows loans. But also you guys can contact me through email, mhernandez@wamtgmortgage.com. Okay. And so, yeah, those are pretty much one of the easiest ways to be able to get access to me and, so we can start your home buying process.
Okay. So if you guys, of course, have any other questions for Maria, also you can reach out to us on our socials. And, of course, if you guys need any insurance questions or any insurance quotes, reach out to us also. But, Maria, thank you for being on the show today.
Thank you, Francisco. It's been a pleasure.